Hello and welcome to another episode of Exchanges. Over the coming weeks, I am going to do a fair amount of deep diving leading into the Economic Reform Roundtable. I think we need to do a lot of discussions about it because the exchange that we're having right now around the future of Australia is absolutely paramount. I'm going to get in as many economists, demographers, behavioural economists as I can to really discuss where we're going and what could come out of it, what's likely to come out of it, what's not likely to come out of it, the behaviour and actions that are going to go around that. So we're starting today, and I have got in the fantastic Belinda Allen Senior Economist at CBA to go through the particularly strong economics around housing, because as she will hear from what she says today, housing is the biggest key to unlocking everything that we have in this country, and therefore what her opinions and CBA's opinions are around the future of Australia's economy with that in mind. So without any further ado, here is Belinda Allen. Belinda Allen, welcome to Exchanges. We are recording this on Monday, which is the day before the RBA meets on releases on the 12th of August. They are meeting as we speak right now. You and I have been speaking offline about the future of where the RBA is going. We think they're going to cut rates tomorrow by 0.25%. I think the bigger question for you to start is, where is their terminal rate with regards to this current rate cutting cycle? And then what the next movement for them is after they reach that terminal level?
There are lots of really good questions there. We've been having very similar conversations here at Commonwealth Bank as well. And we often say sensible people can make arguments for a lot of different future paths for the Australian economy at the moment, and then the future path of the cash rate. So maybe let's just take a step back and think about the rest of this year. So we are the day before the big RBA decision in August.
Yep.
Now, 5 weeks ago, they disappointed. So we are expecting them to cut the cash rate by 25 basis points on Tuesday. After that, we're pretty confident they'll cut in November. So they still seem really cautious about the outlook. They don't want to go too quickly. There's probably some caveats to that depending on where the unemployment rate goes over coming months. So I think the next two cash rate cuts are locked in, August and November. I think beyond that, it really comes down to what happens with inflation. So if inflation looks like it's settling in the midpoint of the target, and the RBA forecast that they release tomorrow also have a cash rate profile that goes down closer to 3, and on their forecast, inflation's still at the midpoint, then I still think they can cut into next year. But for them, I think it's going to come down to those forecasts. We still see the risk of them cutting early 2026. So I think at the moment, the risks are the cash rate goes down closer to 3 rather than, it's staying around its current level.
Because on that, the fascinating part is that the market has the same pricing in terms of where it sits, but it's telling you that once it gets to that 3.1, considering we've got that annoying 10 basis points that's just hanging around like a bad smell, that's it. And then it flatlines. So that we could go through a same period that we went with the rate hiking cycle where we have 9 months of hold. What are they looking for once they get there? Because obviously, let's talk about inflation in terms of where it is. They are clearly very, very worried about a spike in it. What in that 9 months are they going to wait and watch for to make them not move at all in either direction?
I think it will come down to the economic recovery. So inflation is going to come from how strong demand is in the economy, absent any massive supply shocks around energy, items like that. So for them, it's about how will demand unfold in 2026, and if businesses can therefore pass on higher costs to their consumers. So we know at the moment, like input prices for businesses remain on the higher side, but they haven't really been able to pass that on because demand in the economy has been on the softer side. If we do see a stronger economic recovery in 2026, and businesses therefore can push prices higher, the labour market retightens, wages growth accelerates, then you start to talk about the cash rate needing to move up. That's not our base case scenario. I think if anything at the moment, we see inflation risks to the downside. So the consumer recovery has been on the softer side. Certainly, when we look at the components of inflation data at the moment, they are moderating probably a little bit more than what the RBA expected, particularly around housing. New
Mhm.
dwelling construction costs have been quite contained. Rents are continuing to moderate as well. Market services, which predominantly is driven by wages, are moderating also. So for us, risks sit to inflation again, missing to the downside, and it just feels like we could be moving back into that pre-COVID, I think that 2017, 2018, 2019 environment where the economy was struggling to get going, inflation was below target. That's when you start to see the RBA needing to go a little bit further. Then beyond that, like 2027, 2028, we can develop a
We can
lot of
speculate. I
scenarios.
want to go
Yeah.
back to something you said before because there's several things in there that I think is fascinating on that. Right at the start of your answer was around whether or not businesses can actually finally
Mm.
hand through the increased costs. My question for you on that is, I don't know if the consumer can swallow that in terms of what it is. And does that therefore mean that businesses is stuck in this position that it's telling us it is at the moment where it just cannot invest in itself because it cannot see future investment by actually, raising prices to therefore increase the revenue, allowing earnings to start flowing and therefore investing back into its people or into its product or what have you. How are we going to get around that conundrum? Because business tells us that over and over and over at the moment that they are not just struggling, they can't see past the now.
I think that's a lot what this productivity summit's going to try and answer is how to get more dynamism in the
Yep.
Australian
You're
economy.
jumping ahead
And
of me too on that one as well. But
where our brains are thinking alike
yeah,
at
yeah.
the moment, but a lot of so probably in the near term it comes down to the consumer. You said that there might not be enough in the consumer to kind of improve. I
Hmm.
think we are seeing though, if you look at improvements in real household disposable income, improvements in household wealth, a still reasonable labour market. They're the three major factors that historically have driven the consumer. So if you look at what models, and I know models don't always work, but we have to use them
Yes, we
as
do.
economists to think about where the economy should be heading. If we use models of the consumer looking at real household disposable income improvements, household wealth, given we're now embarking on a home price recovery and a still stable labour market, it all should be showing that the consumer should be probably growing at about twice the rate that it is now. But there's this behavioural
Hmm.
element that's stopping the consumer. So we need to separate the ability and then the desire of the consumer. Consumers do have the ability to lift spending, but at the moment, their preference is to save and pay down debt rather than spend. They're still preferring to spend on big ticket items, discounting, sporting matches, things like that. But overall, there's still the preference not to spend. And that's what's holding businesses back in the short term from being able to kind of pass through those higher costs.
So the other then question from your answer there is you follow very closely that behavioral element at Combank with regards to the desire. Let's pick up
Mm.
that term. The spending desire has disappeared. How long does it normally take, do you see in your models, for that desire to come back with rate cuts? Because that's obviously what the RBA is very aware of, what we discussed at the start of this around their concern about possible movements in inflation, is that the consumer roars back and starts blowing inflation through the roof again. Do you see that happening anytime soon? Because the data that I see and the behavioral, particularly the surveys, suggest it's
Mm.
there, but they're not going to race back like the concern is.
Yeah, then that's what we're seeing in our data as well. There are some green shoots. So, one of the interesting trends we've seen probably since that second rate cut, so May, is renters and
Uh-huh.
those with a mortgage have actually lifted spending faster than those who own their home outright. And it's been more on the discretionary side of things as well. So there are certainly some very small green shoots that we are seeing an improvement in spending coming through. And generally, we are continuing to see consumers come out for end of financial year sales, the Nintendo Switch. We saw that
Mhm.
as well
Yep,
in our
that was
data.
incredible.
Big ticket events. No doubt we'll see it in July with the Lions test match. So there is still elements of green shoots coming through, but on a whole, it's certainly much more sluggish and taking longer than what our models would suggest. And we also see it through our savings side of the equation as well. So flows into savings and offset accounts and redraw facilities are still rising faster than what we saw in 2024 and much faster than what we saw during the 2 COVID lockdown years as well. So all that extra income that's now flowing through is still going through into savings and offset accounts. Early stages of a green shoots recovery, but it's certainly, I mean, we're in August now. It's
Hmm.
taking longer than what you would see in past cycles as well. And maybe that's just this view that it is going to be a shallow rate cutting cycle. Maybe that's also what's holding consumers back.
That's certainly what they're hearing, right? So, if, from
Mm,
people like you and me, is that this 3% level is where you're going to get to, and they, as you said, the other part of your answer previously was about that 2017 to all the way up to December 2019, even the first 2 months of 2020 before
mm,
COVID really kicked off. The RBA was in this rock and a hard place that kept telling you that it needed ammunition. That was the word at the time from Philip Lowe, in the chamber. Now it turned out to be true because COVID happened. But do you think that even at 3%, which the RBA argues and most will argue is neutral, it's not an accelerating or an accommodative setting period, is it around having that ability to react like they could? Because in 2017 through 19, they did undershoot
yeah.
inflation for several years. It wasn't just a couple of quarters; it was 8 quarters in a row where they were below. And before, and they still didn't even act in that period. Is that the other risk here? Is that they again, like that period, undershoot inflation to keep things in a status quo, and therefore, as you pointed out before, consumer stays in a slightly saving mantra.
Mm.
Businesses continue to just chug along, but not with growth. Is that the other risk that comes here? Is they miss the chance to stimulate when they probably should be actually doing that?
That is the chance, right? But I think
Mhm.
also what we need to look at in comparison to that pre-pandemic period is the impact of fiscal policy. So if we think back to what fiscal policy was doing through that period, it was tight. The whole aim was to get the budget back to surplus, limited spending. We're in a very different mindset for what fiscal policy can do and the impact on the economy. We just need to look at the main growth drivers in the Australian economy over the past year or two, and it's been public demand. So, fiscal policy, government intervention in the economy is now much more stronger, and it's doing some of the heavy lifting as well as monetary policy. So, I think those policies are working better together, particularly compared to that sluggish pre pandemic period. But I think it also then comes down to uh, probably what the RBA has been concerned about in terms of cutting to date is they're still scarred from that high inflation period. So the 2022-2023 period where inflation was so high, taking so long to come down, they are at the end of the day, and this is what we tell everyone, is they are an inflation fighting central bank.
Mhm.
They do have a dual mandate, but they have very much been concerned about inflation reaccelerating. So they will make sure that that is fully under control before they need to cut interest rates below neutral. And as you said before, neutral, look, it's between 3
What
and 3.5%,
whatever that
three and a
is.
quarter, whatever. It is hard to tell. It's a very academic concept.
Mhm.
But I think they will be conscious of taking the cash rate below unless they're convinced inflation's going to undershoot, or if we do see a material lift in the unemployment rate, which is, of course, the other part of their dual mandate.
Yeah, I'd argue that, there is no other part of the mandate. I mean, for a long, long time, most people didn't even realize that employment was actually part of their whole, and technically there's a third one, right? Which is the
Oh, it
prosperity of
used
the
to be,
Australian.
yeah, but
Yeah,
yeah,
right.
yeah.
Yeah, which is the prosperity of the Australian nation, which is GDP, and looking at this stable Aussie dollar. But we've skirted around it. Let's go to it, which is fiscal policy, the productivity round table, which is now called the economic reform round table. This is a political question, so I understand you've got to be a little bit mindful, but are we about to see political theatre here? Is this going to be a scenario where we talk about things, we hear about things, but actually the fiscal side of policy gets away with saying we're going to wait 3 years to have an election, because that's what the Prime Minister has told us last week. What are your hopes for the economic reform roundtable? And what do you want to see that could create the word you used before, the dynamism that we actually need to move, particularly private investment in this country?
Yeah, some really big questions there. I
Mm,
think what we're hoping to see, I guess, from an economics point of view is how do we improve planning processes? How do we cut red tape to improve particularly business investment in Australia? It's been improving. Certainly in the period post-COVID, we have had stronger business investment, but obviously more is needed when we look at the productivity statistics that we have here, and it's obviously quite a soft picture for productivity growth. I think when we think about what are some of the key issues that are impacting the Australian economy over coming years, it's housing and the challenges around housing affordability. So, how do we improve investment in housing? How do we make housing more productive? How do we make the sector more productive? So, whether or not that's, you know, changes around approval processes, there has been some improvements lately, but really more could be done there. How do we make the construction sector more productive? Because that's one of the weaker points for the Australian economy. That's one area. Definitely on the investment side, it's all around that red tape. It's about incentives to drive investment forward as well. And that could be anything, you've heard a lot of different policy, I guess, options out there
I'd
about
even go as far as ideas, really.
ideas to, I guess, be able to write off investment straight away, things like that. All of that's needed. But I think it's also the coming together of all levels of government to kind of drive that agenda. We have seen elements of that, I think, in housing, and we have already seen an improvement in approvals. So it can happen if everyone works together. And then I think the third challenge, I think, for Australia is how do we generate more revenue
Mm,
in taxation?
yep.
So we have the view that any tax reform or tax changes would have to be budget neutral to budget positive, given the mining boom's over. We're not going to get that uplift from commodity cycles anymore. A lot of spending pressure in the budget around the NDIS, defence, the care economy. How do we generate more revenue in the Australian economy that can be used to, I guess, generate what we need to improve living standards going forward? So I'd probably put it in those three buckets. That's what we're hoping to see. But like all of these things, I guess the proof will be in the pudding as to any hard and fast outcomes.
So let's flesh out the third one,
Mm.
because that is what you and I obviously talk about a lot and what we do. We know, again, I'm going to come back to it, so I'm not going to put you on the spot here with it, because the Prime Minister has ruled it out. Like, let's put that very clearly, that they're going to have to go to the election in 3 years' time with tax reform as their future idea. So we've got 3 years to sort of before we even see this. But direct and indirect taxation, one of the big discussion points that keeps coming up over and over is the GST
Mm.
and where the GST could go to. I mean, you look at somewhere like France, for instance, they don't actually have personal income tax. Everything is consumption tax. Is it a good idea or not? The other thing about the GST is it brings in another world that you work in, which is, looking at the states. The catch with the GST and the way that the legal system works here is that the states have to all agree on it. And clearly, we've seen during COVID, the states don't agree on lots of
Mm.
things. How are we going to get the tax reform that's needed to raise revenue, as you said? Particularly, let's start with the GST, and then we'll come to a couple of others.
So I think that the GST is really hard, and that's where we look at it through the lens of any reform needs to be budget neutral to budget
Mm,
positive. And that's very hard with the GST. So we think that will largely be off the agenda. At the moment. There will be other measures that look to be more the preferred option at the moment for any form of tax reform, which is a bit more uncertain given comments in recent weeks. So we would tend to look at things like superannuation tax, CGT, uh, concessions, obviously hearing a lot more about cash flow tax as well. They seem like something that will be more pursued given their ability to be more budget neutral to budget positive than GST reform.
So just go through then, because a lot of people have asked me that question around cash flow taxation. So this is
Yeah.
revenue taxation.
Yeah.
It's around. I mean, there would be an argument also to some extent that GST is taxation. How is that going to go down? Because again, this is asking the question for business to where the majority of the revenue increase is actually not be taxed on their profit, to be taxed on their revenue, which actually, when you think about it, it's probably a very good idea. But how are they going to get this through? Because again, government and businesses have been at loggerheads of all persuasions for the last 10 years, telling businesses all the practices they've probably got used to since the GST came in and dealing with also profit tax. What would they do, and how do you see a revenue tax, as we should probably call it, cash flow tax, going down? Because it clearly would raise a very decent amount of income, particularly, as he said, the mining boom is over. The petroleum resource rent tax is probably broken. This would catch it immediately. But how do we get this through, and what benefit would it actually bring?
Oh, look, I think those questions are honestly a bit beyond me about how you
No,
get
they're not.
these things through the political framework that we're operating in. But I think there is this sense for the first time, certainly in the last few years, that there's more, I guess, desire to want to talk about how do we improve things for the future. So I think you
Mm.
just have to look at that through the business contributions to the productivity summit, that there is this want to talk about how do we make things better. So at least there is that sense of optimism going into that. I think what makes it harder is the end outcome, and we know the political process can be a bit more challenging. But I think at the heart of the day, we need to look at what problem are we trying to solve, and we're trying to improve, I guess, the budget position and look at how do we make the Australian economy more productive? How do we get investment going to the right places and solve for a lot of these big things that need to be done in the Australian economy? So it's going to be hard, no doubt. But I think the future of the Australian economy is really going to be driven by a lot of what happens over the next 5 to 10 years. And we haven't even spoken about things like the energy transition that's
Yep.
still weighing on the Australian economy and the investment
Let's
pipelines
go to that.
that
T-
need to be done there.
talk to me about, because this I absolutely agree with, is that what we need to realize is that over the next 2 decades, probably even the next 3 decades, energy needs to get to a price point that it's almost free, right? So once the energy investment has been made, the cost of energy will actually be near enough to zero. How we amortize that forward, how you provision for it, etc. But the energy transition, take me through the costs that are happening now, but the efficiencies that it will bring into the future, and how do we actually sell that? Because that's what I think's been missing, is that we are not selling the transition and what it will actually mean for us into the future.
And I think it's hard. Excuse me. I think it's hard because the transition is actually quite messy.
Mm.
Like, it's messy for the cost of energy over the next 5 years. We know there's a lot of gas shortages in Australia that's going to drive up costs for businesses. So I think it's a hard discussion to have because it's not clear cut. We're going to go into a period where businesses are going to be paying more. They're going to need to electrify. And that's a really hard discussion to have. So we need to go through a messy period. Transition's not going to be easy, and there needs to be a lot of investment in the Australian economy to make that done. So who's going to make that investment? How much intervention there will be from the public sector in helping that happen? But I think also, what about offshore investment coming into Australia? There's a lot of bigger dynamics at play. We're hearing a lot about de-dollarization, potentially investment moving out of the US into other areas. Australia's a very attractive option given how much work needs to be done, and areas like critical minerals as well. So a lot of these bigger plays in the Australian economy, I think, can be wrapped up in like a broader element as well, looking at how do we get investment? How do we make that transition take place? But we seem to lose sight of that when there's so many other challenges to solve in the Australian economy.
Going back to your previous answer, you used the word problem. And I think, therefore, I want to come back to what I see as one of the biggest problems in the tax reform question is the incredible over reliance that the federal government has on personal income tax. So this is, I think, the sell, right? Is how do we get from a point where at the moment the government, even in their own revenue numbers, forecasting that 62% of total revenue for the government is going to come from personal income tax, to start redistributing that mix? Because again, you used another thing that I love saying, which is show me the incentive and I'll show you the outcome, which is the Charlie Munger quote of the century. We are incentivizing people to work less. We are incentivizing people to basically cap themselves out. Are we going to see reform in this space? Because that, I think, is, that if it affects the entire electorate, every single one of us work in some shape or form. What is the step forward with personal income tax?
Look, and it's a really hard question to solve as well, given we also have an aging population. So we're going to be
Mhm.
much more reliant on a smaller number of people working rather than more broad based taxation, which is what the Australian economy will need to get through, given all the challenges we have on the spending side as well. How you go about solving that is very hard, and it probably shows you why it hasn't been done already as well, because there's no neat solution to that. So it is looking broader. I think it's looking at how to tax the business sector more efficiently, a lot more conversations around that. But also the reality is, and where what we've seen already this year is looking at how to tax the older generation a bit more efficiently as well. So we've seen that already with the super tax. We may well see it with capital gains tax concessions as well. So I think the good thing is at the moment is we are having these conversations, and it looks like it is increasing in the need to actually solve some of these problems. We've been of the view that obviously we're in the second term of a Labor government, more than likely to be three. There's going to want to be a need to leave a legacy from this government, given how long they're potentially going to have to be in power. So, what that legacy is, I think, is going to have to come down to tax and how do we solve some of these big challenges. Exactly how they go about doing that, though, I think is less clear
Yeah.
still, even
Yeah, I'd
with
agree.
all the things that we've talked about. I think it's still less clear. And I think the
Yeah.
problem that also creates, though, is it creates uncertainty for businesses and
Mhm.
consumers as well. And that's a challenge. So when we talk about what could hold back the improvements in the Australian economy, there's an uncertainty tax. We're
Yeah.
seeing it from offshore at the moment, from the global tariff situation, and we're seeing it at home with challenges around policy making as well. And that's when we talk about kind of in the Australian economy where we could go beyond 2026. It's how do we solve some of these big problems to remove that uncertainty?
Wholeheartedly agree. And not only that, I would go further in saying that this current setup, they have the political capital to spend. And at the moment, okay, it's very, very early into their second term. So there could come time, but they need to spend it. They need to take the risk and spend it, because the other thing that they've got in their favor is the opposition is now so far out of power. I mean, if you look at the numbers from them, they've gone from 76 down to 43 in 3 elections. That's a trend that they're not reversing anytime soon. So I can say that because I know you can't. But the political capital spend is part of this question. And I think I agree. The term you use there is perfect. It creates uncertainty. The fact that they are unable or unwilling, I don't care which term you want to use out there listening to this, to actually govern when they are in power is the concerning factor. And that also gets back to what you spoke about at the start, which is, the behavior. It's learned political behavior, I would argue as well, is that, you know, don't offend and you won't lose. And that's the other part that I think we've also got to get out of here. So that brings me to the final part of this is we started talking about the states and the
Yes.
differences between particularly WA, I'd argue probably
Yeah.
Queensland, and then the traditional other states. At what point does the feds need to step in and say, if we're going to become more productive, we're going to become more efficient, we have to come together as a group, as a nation, and actually, you know, remove, particularly state-based tax system and states-backed regulation. I mean, you look at Queensland, everybody makes quite a joke about the fact that something like 118 different red tape regulations if you want to open a cafe in a high street in Queensland. Where does that start? Because you guys watch the states very closely and you know what the spending habits of them. How is that reform going to happen? And how do we actually start bringing up some of the slower states back into line Tasmania being a great example.
I think probably the first comment to make is there are so many drivers of state performance at the moment. So you talked about kind of the tax challenges, state government spending. That is certainly one of them. Housing, I think, is also driving a lot of different performances by state as well. We're seeing still migration out of particularly New South Wales because of the challenges around housing affordability. People are moving into Queensland and WA. As a result, that's pushing up population growth, which is also helping those state economies. So there are a number of different reasons why we're seeing performance change by state. So to me, it always comes back down to housing. If we start to solve some of these affordability challenges, we might have more of an even state performance, particularly by state budget revenue, but also through migration flows, and then the sensitivity to the interest rate cycle as well. So one of the things that's been holding back New South Wales and Victoria in recent years is the high debt burden of households. And therefore, we've seen weaker state performances as well around consumer spending. And that's what we see in our own data as well. WA and Queensland and even South Australia have had much, much stronger performance, even on a per capita spend level, than what we've seen in New South Wales and Victoria. So there are so many different reasons creating divergent performances between the states. But for me, as I said, it all comes back down to housing.
Yeah, and I know that. And that's why I asked that question, because I think it's an Australian pastime. I mean, as you point out, it's our affordability problems as part of it. And there was a great stat the other day that showed that, Australian housing total value now is 4.2 times total GDP, like annual GDP. It's astonishing when you compare it to the US, which is 1.6. I always finish these talks with a big, broad question. I've been asking you heaps of them, but I do need to finish you with this question, Belinda Allen. Belinda Allen, if you were in charge for just one day, what would you do?
Oh, it's a good one. I would have to do something around housing. And I think that the challenges for housing would be, how do we solve building more in the inner city ring? I live in inner city Sydney. I look at my kids' school, which has been dwindling in enrolment numbers over the past 5 years because no one young is moving into the inner city fringe. So it's about how do we solve that? So it would be making more dedicated housing in the inner city to kind of rebuild that life around the inner city. So to me, it all comes down to planning approvals and trying to improve that. So I think that's what I would do.
That, I think, is a perfect way to end this incredible exchange. Belinda Allen, thank you so much for joining me. Big thank you to Belinda. It's a fantastic insight. You can hear what they're seeing, and again, why she points out that if we can unlock housing in a much more efficient way, it will therefore create an opening of all around comments, business, consumption, savings, etc. And it is a very, very good reasoning that she has behind it, as you heard in the exchange. So thank you to Belinda for coming on. Again, as always, to you guys out there, thank you so much for watching, listening, and everything in between. We do love you having on this program. If you haven't already, please subscribe where you can, or give us a rating where you can. The more and more we can build this program, the better we will get, and the more guests we continue to come in. And then also, don't forget, we do have an email. It's exchanges@evanlucas.com.au. But again, thank you so much for watching. Until next week, have a great day.